Question number 21. Lazar Industry produces two products, crates and boxes. The per unit selling price, cost, and resource utilization for these products is given as follows. The selling price of a crate is $20 and that of a box is $30. The direct material costs are 5 each. Direct labor costs are 8 and 10 respectively. Variable overhead costs are 3 and 5. Variable selling costs are 1 and 2 respectively. It takes 2 machine hours per unit and it takes 4 machine hours per unit to make a crate and to make a box respectively. The production of crates and boxes involves joint facilities and processes, and they use the same kind of facilities. The total fixed factory overhead is 20 lakh, that is 2 million. The total fixed and selling administrative costs are 840,000. All right. Productions and sales are scheduled for 500,000 units of crates and 700,000 units of boxes. Lazar maintains no direct material, no WIP, or no finished good inventory. Lazar can reduce the direct material cost for a crate by 50% per unit. The direct material cost of a crate at the present moment is $5. So if I reduce it by 50%, I'm talking about question 21, there will be a saving in material cost. There will be a saving in material cost. It is currently $5 per unit. I can reduce it by 50%. So the saving that I will be getting is $2.5 per unit in materials. That is my saving. That is my saving. A saving in material will lead to variable cost reducing. Please try to understand, sales minus variable cost is equal to contribution. So if variable cost is going down, contribution is obviously going to go up, because nothing is said about sales. I am considering it to be constant. Let us try to humor ourselves in this. Let us say that 10 is the selling price and the variable cost is, let us say, 7.5. Now this has gone down by 2.5, so the selling price stays 10, but the variable cost now becomes 5. So what is the contribution that you get? Earlier it was 2.5, now it is 5. So obviously the contribution has gone up because the variable cost has fallen down. I hope everybody understands this. They can reduce the direct material cost for these crates by 50% per unit. By how much? By 50% per unit with no change in direct labor cost. However, this would increase the machine hour production time by 1.5 hours per unit for the crate. What is the meaning of this? The meaning of this is very simple. The crate requires 2 machine hours to be manufactured, and the cost of these 2 machine hours comes out to be $3. Please try to understand. Agreed or disagreed? First of all, I am interested in calculating my variable overhead rate. Please try to understand that my variable overheads are $3, and they are because my machine hours that I am using are 2 hours. Therefore, the rate of my machine hours is equal to $1.5 per hour. Now, what is going to happen over here is there is going to be an increase in production time by 1.5 hour per unit. Please try to understand my next statement. Please try to understand my next statement. My existing hours are 2, and now there is going to be an increase by 1.5 hours. So now my revised hours are going to be how many? They are going to be 3.5 hours. Please try to understand this. What is my revised hours? My revised hours is 3.5 hours, and this 3.5 hours, I am remunerating this at the rate of 1.5 per hour. At the rate of how much? 1.5 per hour. Please try to understand. Out of this 3.5, 2 hours was already existing. So what is incremental? What is additional is just this 1.5 hour. It is just this 1.5 hours that is incremental at the rate of dollars. 1.5 per hour. 1.5 hours are extra at the rate of 1.5 per hour. So 1.5 multiplied by 1.5. Therefore, $2.25 is an increase in my variable cost. How? Please try to understand. Earlier, my work was getting done in 2 hours. Now I need this 1.5 hour extra. So now I need 3.5 hours. If I say that I need 3.5 hours at the rate of 1.5 per hour, 3.5 multiplied by 1.5, my bill comes to 5.25. But out of this, I was already footing a bill for 2 hours at the rate of 1.5, which is nothing but 3. So what was extra over here? The extra was 2.25. The extra was 2.25. Please try to understand this. This is the additional or the incremental cost that I have to incur. Therefore, this is an increase in my cost. So here I have increase in variable cost. Increase in variable cost by how much? 2.25 per unit. Saving is an inflow, increase in cost is an outflow. Therefore, what is the net saving? My net saving is equal to 0.25 per unit. My net saving is 0.25 per unit. I am dealing with crates, and crates have a total of 500,000 units. How much? 500,000 units. So 0.25 per unit for how many units? For 500,000 units, which fetches me 0.25 multiplied by 500,000. My saving comes to dollars 1,25,000. My saving comes to dollars 1,25,000. Now please try to understand. I have a saving in cost. Saving in what cost? I have a saving in variable cost of 0.25 per unit multiplied by how many units? Multiplied by 5 lakh units. So it's a total of $1,25,000. Please try to understand. My variable cost is saved. That means my variable cost has gone down. My selling price is constant. Therefore, obviously, my contribution margin increases. Why does it increase? Please try to understand. Whatever was my selling price, my selling price was 20. From this, I subtracted my variable cost. My variable cost that I subtracted earlier included direct material of 5, direct labor of 8, and variable overhead of 3, and variable selling of 1. Of 1. Variable selling of 1. Variable selling of 1. Now, in the new scenario, my selling price stays where it is. My direct material now becomes suddenly 2.5. My direct labor stays where it is. My variable overhead suddenly becomes how much? 5.25, and my variable selling stays 1. Therefore, if I was to look at it, please try to understand that while I have saved two and a half, I have lost 2.25. So I save how much? I save 2.5 and I increase 2.25. So my net saving is 0.25 per unit. Again, I'm repeating for how many units? For 5 lakh units. That's $1,25,000 saved. $1,25,000 saved means variable cost has gone down. So obviously my contribution has gone up. The question is, what would be the effect on the total contribution margin if this change was implemented? It will increase by $125,000. I hope everybody understands the reiteration as well. I am reiterating on the solution, right? Everybody put in your responses. Don't give me a direct message. Put it in a group, put it in the group chat so that I can understand. If any child has a doubt, we will support that particular candidate. But apart from that, live students, any doubts? Any problems? No. So we all understand and it is justified to us why the answer is 1,25,000 increase. Yes. Let's go to the next question. The next question is about ticker company. Now let's talk about ticker company. Now this is a slightly theoretical question, slightly theoretical. Let us see what happens over here. Ticker company is selling two products. There's a product A which provides a contribution margin of 3 per unit, and there's a product B that provides a contribution margin of 4 per unit. All right. So this is question number 22. Question number 22. There are two products. There is a product A and there is a product B. The contribution per unit of product A is $3 and product B happens to be $4. Obviously, B has a larger contribution per unit. Now, what they are saying, Ticker's sales mix has shifted towards product A. Which of the following statements is correct? Ticker's sales mix has shifted towards product X. What is the meaning of this? So we will have to take an example. We will have to take an example. Say, for example, A has, let us say, 4,000 units and B has, let us say, 8,000 units sold. So what is the total? The total is 12,000 units. Now, if this mix goes towards A, it shows that A will increase. Says, let us take A now 6,000. But the total will stay how much? 12 only. So B automatically will fall to how much? 6,000. What is the meaning of this? Sales mix. The sales mix now has shifted towards A. Now I shifted towards A. Now please try to understand my next statement. Let us assume, let us assume the fixed costs to be dollars 15,000 just for the sake of it. So that, and these are all my assumptions. These are all my assumptions. I am taking it out of my pocket and I am just whamming it in your face. That's it. You have to agree. Why? These are my assumptions. These are my assumptions. How else will I justify my calculations until I make those assumptions? Sir, but these assumptions have to be made in those many hours, in those many minutes while our exam is on. Yes, you have to. How do I do that? Practice. There is no other way. If there is some other way, the person who's telling you the other way is lying to you. If there is a substitute to practice and hard work, show it to me. For the past, I would like to believe 2025 years, there has not been any. If you have invented one, let me know. Right? Now pay attention over here. Now see what has happened. My product mix or my sales mix has shifted towards A. So I'm going to do more of A. Please try to understand. A has a lower contribution and we are doing more sale of A without increasing without increasing the total units sold. Please try to understand this. So in the old scenario where A was 4,000 and B was 8,000 and A had a contribution of 3 and B had a contribution of 4, I was looking at a total contribution of 12,000 and 32,000, which is a total of how much? 44,000. And my fixed cost was how much? It was 15,000, which made my profit before tax to be 29,000 on my assumptions. Now, what have I done? Now, I have made A 6,000 and B has also fallen to how much? 6,000. So this is 3 and this is 4. So this becomes 18,000 contribution. This becomes 24. So what's 24 plus 18? You get to 42. Agreed or disagreed? Please notice that your contribution has fallen, but your fixed cost stays where it is. So 42 minus 15. What is the answer? The answer is 27,000. So what will happen? The answer is the total number of units necessary to break even will decrease. No, rather they will increase. Why will they increase? As contribution has fallen. What is the formula of break even? Let us quickly revise. Break even point, if I have to go in units, it is what? It is total fixed cost divided by contribution per unit. Or if I have to go on the basis of value, it is total fixed cost divided by profit volume ratio. It is total fixed cost divided by profit volume ratio. Send the 44 minutes YouTube link to all the students who are attending. It's on the Apex WhatsApp group. It's the first link. It's for 44 minutes. It's marginal costing formula derivation. Let them all understand how formulae are derived. Now, these are the two formulae. Now, I am saying that contribution per unit will fall. Obviously, the fraction is going to increase. It's basic arithmetics. The overall contribution margin ratio will increase. No, it will decrease. It will decrease because the contribution is falling. The operating income will decrease if the total number of units sold remains constant. Yes. What has happened over here? Essentially, units sold is kept constant at total 12,000, and operating income has fallen from 29,000 to 27,000. The contribution margin ratios for A and B will change. No, they will not change. The contribution margin stays the same. The contribution margin means contribution upon sales into 100. Is there a change in selling price? No. Is there a change in variable cost? No. So if selling price and variable cost are unchanged, contribution margin, which is nothing but profit volume ratio, will stay unchanged. Please try to understand this concept very, very clearly. Look, I may change the number of units sold. See, I have a selling price, for example, 10, variable cost, for example, 4. So, what is my contribution per unit? My contribution per unit is 6. So, what is my contribution margin ratio? It is 6 divided by 10 multiplied by 100, which is equal to 60% or 0.60. Now, the number of units sold can either increase or it can either decrease. That will not impact the per unit metrics of this particular product. Per unit will stay the same. The contribution margin will stay the same. The total sales will change. The total variable cost will change. The total contribution will change. But the percentage will stay the same. You can experiment with it and check it out if you want. Try it with 5,000 units. If you try it with 5,000 units, your contribution here will be 30,000 and here it will be 50,000. Right? If I take 5,000 units and take it with 8,000 units, this will be 80,000 and this will be 48,000. In both places you will notice that the contribution percentage margin or PV ratio stays at 60%. So the contribution margin ratios will change is an absolute fallacy. It cannot change. It cannot change. So what's your answer? The operating income will decrease if the total units remain constant. That right there is your answer without any doubt. Please try to understand. This highlighted, underlined item is your answer. How is that your answer? We did it with this calculation of 29 and 27,000 respectively. I hope everybody has understood this. If there are any doubts, please go ahead. Do not worry. You will get a PDF of this notebook that I'm making for your, personal individual note making, etc. Let's go to the next question. Again, it's of Lazar Industries. Question number 23. I mark this question as an important question because it has a interesting and important concept. So I am talking about question number 23 at the moment. Lazar Industry produces two products, crates and trunks. The per unit selling prices, costs, and resource utilizations for these products are given as follows. The selling price and various variable costs are given to you. I am interested in the machine hours per unit, which are 2 and 4 respectively. The production of crates and trunks involve a joint process and they use the same facilities. The total fixed factory overhead cost is 20 lakhs or 2 millions and the total fixed overhead administrative cost are 840,000. Fair enough. We are scheduled for 500,000 crates and 700,000 trunks. Fair enough. Lazar has a normal capacity to produce a total of 20 lakhs, that is 2 million units in any goddamn combination you want to make it. So can you make 5 and 7 lakhs? Yes, I can make 5 and 7 lakhs. 5 and 7 lakhs put together is only 12 lakhs. My capacity is 20 lakhs. And it maintains no direct material stock, no work in progress stock, and no finished goods stock. Due to the plant renovation, Lazar will be limited to 10 lakhs, that is 1 million machine hours. Now, here comes the problem. Here comes the problem. Please pay attention to crate. A crate per unit, a crate per unit and a trunk per unit require 2 machine hours and 4 machine hours respectively. I hope everybody agrees. Now, what are the units of crates that you aspire or you ambition to make? Sir, 500,000. So the hours needed over here itself are 1 million or 10 lakh. And what about trunks? 700,000. So you're looking at 28 lakhs or 2.8 million hours. So you need a total of how many? 38 lakhs or 3.8 million hours are needed. But what you have in hand is a measly 10 lakhs, that is 1 million. Therefore, hours of machine or machine hours are not sufficient to make market demand. So the company is going to suffer. The company is going to suffer. This is a question of limiting factor. What is the limiting factor? The limiting factor is machine hours. How do you solve a limiting factor problem, sir? We calculate the contribution per unit of limiting factor. So contribution per unit of machine hours is needed. Let us get in. We are looking at crate, we are looking at trunk. Let us put in selling price 20 and 30, seal it off over here. Let us list down our variable cost. Sir, direct material, how much is direct material? 5. 5. How much is direct labor? 8. 10. How much is variable overhead? Variable overhead is 3 and variable overhead is 5. What is the total? 8 plus 5, 13 plus 3, 16. I hope everybody is with me on that. Yes or no, please tell me that. Right? Agreed or disagreed? 8 plus 5, 13 plus 3, 16. And we have variable selling. That is 1 and 2. So what is my total variable cost here? My total variable cost here is 17. 10 plus 5, 15 plus 5, 20 plus 2, 22. So what is my contribution per unit? Contribution per unit is selling price 20 minus variable cost 17, 3. Selling price 30 minus variable cost 22, 8. Now what are my machine hours per unit? 2 hours per unit and 4 hours per unit. I hope everybody understands. Agreed or disagreed? Please tell me that. Yes. Now, what is my contribution per machine hour? It is 1.5 per hour and it is 2 per hour. So, obviously, I give a ranking, I give a preference. This gets the second rank and this gets the first rank because it gives me a higher contribution. Please try to understand this statement. In a state of limitation of machine hours, trunks gives us a contribution of $2 per hour, whereas crate gives us whereas crate gives us a contribution of dollars 1.5 per hour. So obviously trunk gives us a better and a higher contribution. Therefore, trunk gives better operating results. Therefore, preference is given to whom? Preference is given to trunk. Preference is given to trunks. Now, let us please try to understand. How many hours per unit? Sir, 4 hours per unit. Now, please try to understand. Machine hours available are 10 lakhs, that is 1 million. Hours per unit for trunk, that is 4. Therefore, units of trunks. How many units can I make? I can make 250,000 units. Please try to understand. What is the market demand of trunks? Sir, it's 700,000. So, owing to the limitation, while the market wants 700,000, I can provide the market only 250,000. Therefore, with 250,000 units of trunks and contribution per unit, we have calculated the contribution per unit of trunks to be how much? It is 8. Contribution per unit is how much? Contribution per unit is 8, I believe, right? So it is 8 per unit. So now what do we get to? What is our total contribution? Now what are they asking us? They are asking us in the question, what is the maximum amount of contribution margin? The maximum amount of contribution margin that you can generate over here is 2 million, that is 20 lakhs. And that is your answer right here. And that is your answer right here. Please try to understand, that is going to be the answer. Why? Any other product mix that does not take into consideration the limitation factor will not give you optimal contribution, will not give you the optimal profit. Please try to understand that in the case of limiting factor, in the case of limiting factor, only the contribution per unit of the limiting factor will give us the best or optimum, or you can use the word optimal as well, product mix to, this is the main word, to maximize contribution. To do what? To maximize the contribution. Sir, why are you writing all this rubbish over here? This is not rubbish. This, whatever is being written down here, is going to help you kids in your essays, is going to help you kids in your essays. Do you think common sense dictates that we are not going to discuss essays? Then you are living in a delusional world. There are close to 30-40 essay topics within the exam support package itself, and we are going to do our best to ensure that almost all of those 30, 40, 50, all of them are totally and completely discussed. Please try to understand, please try to understand. Now therefore we have finished this particular question. The answer is 2 lakhs, sorry, 20 lakhs. We go to the next one. What is the next question? The next one is a rather interesting question, because generally we have done combined break even point in terms of units. We have not yet done combined break even point in terms of dollars. Now in this question, there is a classic mistake that the IMA wants you to commit. The IMA wants you to commit a classic mistake. So, what is it that we are going to discuss? We are going to discuss this particular question, question number 24, along with its important do's and don'ts. This is an important do's and don'ts based question. Focus on this question. There are two products. Each product has been given its individual fixed cost. While the individual fixed costs are available for each product, assuming the product mix and sales mix is the same, I want the company's break even point, is what the IMA says. The IMA is asking you for company break even point. Question is asking you company break even point and not individual unit or product break even point. Please understand this question, this statement. Sir, I don't understand this statement. Don't bother right now. Pay attention. There's product 1 and there's product 2. I have sales of 1 crore 20 lakhs and over here of 30 lakhs. Right, guys? From this, I will subtract my variable cost, which is how much? 48 lakhs and how much? 15 lakhs. This gives me contribution of how much? 72 lakhs and how much? 15 lakhs. Next, I go to PV ratio. PV ratio is equal to contribution upon sales into 100. So it is 72 upon 120 multiplied by 100. And here it is 15 upon 30 multiplied by 100. So here it is 60%, which is equal to 0.60. And it is 50%. 1 second. And it is 50%, which is equal to 0.50. I hope everybody understands this. Now, my dear students, we are talking about company's break even point, combined break even point. We have to take the sales mix. What is the sales mix? 1 crore 20 lakhs is to 30 lakhs. 1 4. So it is 4 by 5, 1 by 5. 4 by 5 is 0.80 and 1.5 is 0.20. Please try to understand. I hope this arithmetic sits well for all of you. So the sales mix is 0.80 and 0.20. Now please try to understand. Now I have my weighted PV ratio. Weighted PV ratio is PV ratio multiplied by sales mix. What is weighted PV ratio? It is PV ratio multiplied by sales mix. So what is the answer? It is 0.60 multiplied by 0.80. This will become 0.48, and here it is 0.50 multiplied by 0.20, and here it is 0.10. Now what is my combined PV? My combined PV will be 0.48 plus 0.10, which is equal to 0.58. Now what is the combined company fixed cost? The combined company fixed cost is equal to 54 lakhs plus 4 lakhs, which is equal to how much? 58 lakhs. Please pay attention. Combined or company break even point in dollar terms is total fixed cost upon combined or weighted PV. So this is equal to 58 lakhs divided by 0.58, and the answer is 1 crore or $10 million. The answer is 1 crore or $10 million. Please try to understand, that's your answer. But sir, then what is the mistake? So this is the right answer. Now I want you to pay attention to the mistake. Now pay attention to the mistake. Don't do this. Don't do this. This is a warning. This is a warning. Please try to understand. Sir, I will do one thing. I have the selling price, I have the variable cost for product 1 and for product 2. So it's 1 crore 20 lakhs, 1 crore 20 lakhs, and here it is 48 lakhs. So what is my contribution? My contribution over here easily comes to 72 lakhs. Agreed or disagreed? So my PV ratio here is 60%. My fixed cost for this particular product is 54 lakhs. So my break even point for individual, this is individual, not company. It will be 54 lakhs divided by 0.60, which comes to 90 lakh or $9 million. For the second product, it will be 30 minus 15, which is giving me a contribution of 15 lakhs. PV ratio is 50%. Fixed cost happens to be how much? 4 lakhs. Break even point over here will be 8 lakh dollars. And the total I will say is 98 lakhs, which is wrong. This is only individual break even point in dollars added together. For combined, we use weighted PV, and this does not have weighted PV. This does not have weighted PV. Therefore, it is only individual break-even point, and that is the reason why this answer 98 lakhs is a facade. That is why this answer 98 lakh is a huge mistake. Please try to understand this concept. The answer here is going to be 10 million. It cannot be 9.8 million for a very simple reason that this over here will make you go wrong. So please read the question carefully. If they use the word companies break even point in your exam, please remember companies means combined break even point. And for a combined break even point, you have to use a weighted contribution or you have to use a weighted PV ratio. This is essentially what will save you from failing. This is what will save your exam fees. This is what is going to get you to pass. This right here is the most important aspect for you to remember. Please take it very, 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 very seriously. Right? So some of the options here make a lot of sense. We are going to the depths and discussing them. This was your question number 24. I jump to question number 25. Now let's pay attention. Now let's pay attention. Question number 25. Wow. Question number 25 is a theory question. Theory questions are very, very important. See, most of the time students tend to ask a question in the USCMA exam. And what is that question? Will my paper be theory or will it be practical? If you ask this question, you are already half battle lost in your head. You're already losing half the battle in your head. You have to be, you have to be like, a person who's not afraid of losing the battle. So always remember one thing. You can have the following ratios that come your way. You can have a 60-40, 60 in favor of theory, 40 in favor of practical. You can have a 70-30 in favor of theory, in favor of practical. It can be other way around also. So it doesn't matter whether it's practical, it doesn't matter whether it's theory. It's your job to do those questions. If you don't do those questions, well, anything that they ask you is going to screw your happiness. So don't put yourself in that position. Now, sunk costs are not relevant because they are. Now, see, please try to understand what is a sunk cost. Question number 25. What is a sunk cost? Now, a sunk cost is a cost incurred in the past. It is already incurred and it is hence not relevant to any future decision. What is relevant to future decision? Please try to understand. When will you have any relevance? Relevance will arise in the following cases. Relevance will arise when there is a saving in cost. Relevance will arise when there is an increase in cost. Relevance will arise when there is an increase in revenue. Relevance will arise when there is a decrease in revenue. Otherwise, relevance does not arise. Sunk cost is already incurred. It has nothing to do. It is nothing but a historical cost. It is nothing but a historical cost. Now, please try to understand. Fixed costs. Now, I want you to remember this. Fixed costs are of two types. They can be avoidable and they can be unavoidable. Please try to understand, if it is fixed cost and it is avoidable, it is relevant to future decision. It is relevant to future decision. But if it is unavoidable, it is irrelevant. What is it? It is irrelevant to future decision. Please try to understand this particular aspect. Now, historical cost. Historical costs are sunk cost. These costs are incurred in the past and they have no relevance in the future. What is an indirect cost? Please try to understand the meaning of the term indirect cost. Indirect costs are those costs you cannot directly associate with the product. You cannot directly associate with the product. Indirect costs are also known as overheads. Example, you cannot associate Shah Rukh Khan's brand ambassador fees in the cost per unit of one bottle of thumbs up. When you buy a 40 rupees bottle of thumbs up, what can you associate to that 40 rupees? Sir, water, sir, carbon dioxide, sir, sugar, sir, flavor. This is what we have incurred. But on in that 40 rupees that you are paying, the company is also recovering from you Shah Rukh Khan's brand ambassador fees if you try to understand. But how much are they recovering? Sir, I don't know. How can I say that? You can't say that because it's a overhead, it's an indirect cost. Sir, period cost. Period costs are a cost that you incur for that particular period. What are period costs? Period costs are generally fixed costs. Period costs are generally fixed costs and they are incurred for that particular period. They are incurred for that particular period. So sunk costs are not relevant because they are historical in nature. Fixed cost will be relevant if they are avoidable. Historical costs are never relevant. Indirect cost, if they are incremental, additional, then they are relevant. Period cost, again, if they are incremental, additional, they are relevant. Always remember, with respect to relevance, ask yourself, is the cost, is what you're incurring going to result in a saving in cost? Is it going to increase the cost? It is going to increase the revenue, or it is going to decrease the revenue? If there is a change in any of this, the question of relevance will arise. The question of relevance will arise. So your answer here is B, historical cost. Now let's go to the next question, question number 26. Again, an interesting question based on this very same concept. Let's focus on question number 26. Let's focus now on question number 26. Rather interesting question. A company plans to add a new product that is going to affect its indirect labor cost in two ways. First, the production manager from the existing product will serve as the production manager of the new product. Please try to understand. Production manager of the existing product will continue as the production manager of the new product. So I can clearly say that there is no additional cost here. Agreed? What I was doing for an old product, I will stop doing that, and now I'll start doing that for a new product. There is no question of any kind of an additional cost over here. I hope everybody understands this. Next point. Her Now see, the first production manager from an existing product will serve as the manager of the new product. So production manager of existing product serve as the manager of the new product. Her means this production manager's current assistant manager will be promoted and assume her previous position. Now this is interesting. Please try to understand. Assistant manager of old product, what will happen? Will get promoted and will become the manager of the old product. Now please try to understand, there is a promotion. Promotion is nothing but an additional cost. Promotion is nothing but an additional cost. Now what is the additional cost? Second, the existing maintenance staff would provide facility and maintenance that would require 30 hours of labor each month, but no increase in their total weekly hours worked. Please try to understand. Now there is a maintenance staff, there is a maintenance staff that will do 30 hours, 30 hours of labor each month, 30 hours per month for new product. But this does not increase their total weekly hours worked. So what has happened is, whatever was their total weekly hours is again unchanged, is again unchanged. If it is unchanged, there is going to be no additional cost. There is going to be no additional cost. I hope you are able to understand this. The company's production managers earn 60,000 annually. Okay. The production manager. Now, if you become a manager, you will earn 60,000. And assistant managers are paid 50,000 annually. So what is the additional cost? I can clearly see it's an additional cost of 10,000. It's an additional cost of 10,000. And the maintenance employees earn 20 per hour. 20 per hour is okay, but there is no increase in weekly hours. So even if you are making 20 per hours, for those 30 hours, your total cost is staying the same. So there is nothing changed. What is changing because of this? That the assistant manager who was making 50,000 will now make how much? 60,000. So the only increase that is happening in this question is that of these $10,000. Please don't be fooled. Your answer here is 10,000. There is no other increase that's happening. Let's go to the next question. The next question is of Johnson. This is a rather simple question. So for Johnson, we are looking at question number 27. Now please pay attention to question number 27. Johnson waits 2 hours in line to buy a ticket. So he has invested time plus and the opportunity cost of buying the $200 ticket. So please try to understand, what will he do? The best alternate. So the opportunity cost. Now please try to understand. They're asking us what? Opportunity cost. Now please try to understand. This time plus there is ticket cost. So The opportunity cost will be for where, what can I do additional with this time over and above? And what could I have done with this? So the opportunity cost will take into consideration both time plus the ticket. So the best alternative of both the 200 and the 2 hours spent in line is going to be considered here, because you have a cost for both the time that you spend and the ticket that you spent $200 on. I hope you understand. Yes or no? Please tell me that. Next, we come to question 28. Question 28 is something you should be able to apply your mind to. The reason for that is we just discussed a good amount of theory about this same concept. In a management decision process, the cost measurement of benefits, which is sacrificed due to selecting an alternate resource, is an opportunity cost. Now, please try to understand what is a relevant cost. See, a relevant cost is either an increase or a decrease in cost or revenue. Please try to understand this. That's a relevant cost. A sunk cost, and a relevant cost is, of course, relevant to decision making. It is relevant to decision making. Sunk cost is irrelevant to decision making. It is a historical cost already incurred. It is a historical cost already incurred. Next comes opportunity cost. What is the meaning of opportunity cost? Opportunity cost is the cost of opportunity foregone. And differential cost. Oh, this is a crazy one. This is option number one cost versus option number two cost. So if option number one costs you $5,000 and option number two costs you $8,000, the differential cost is equal to $3,000. Please try to understand. Now let's take a small story to understand this. Let's take a small story to understand this. Please understand. I have a car purchased in 2022 for $800,000. First of all, what is this $800,000? Is this a sunk historical cost? Yes or no? Please tell me that. What is that? It is a sunk historical cost. Now, in 2025, I decide to use the car as a shuttle cab. As a what? As a shuttle cab. So what do I do? I make renovations and improvements to the car. I need renovations and improvements to the car. What is this? This is nothing but all of my relevant costs. These are my relevant cost, because I have now spent this today, and my decision of using it as a cab will depend on these renovations and improvements that I am making today. Now please try to understand. Please try to understand. I choose Ola that pays me, for example, dollars 10,000 versus Uber that could have paid me dollars 8,000. So please try to understand. Please try to understand. I have sacrificed 8,000 to earn how much? To earn 10,000. So what is 8,000? This is the opportunity cost. And to earn this, this is my incremental revenue. So we discussed opportunity cost. Now, please try to understand. I have got two routes I can go in. I can go in two routes. The first route is Mumbai to Pune. This will cost me, let us say, dollars 4,000. My second route is Mumbai to Hyderabad. This will cost me dollars 6,000. So what is the differential cost here? The differential cost is dollars 2,000. It is nothing but the difference between the two alternatives. The first cost is 4,000. The second cost is 6,000. So the difference cost or the differential cost is $2,000. With this story, we have understood each and every one of the terms that have been laid out in this particular option set. Look, MCQs are not just about playing Kaun Banega Crorepati. Who wants to be a millionaire? Just select the option and bang, you're a CMA. If this would happen, then gamblers also would become CMAs. People who could gamble with the exam software or the exam AI could probably become US CMAs without studying because they would be taking the right gamble. It's about understanding the options right. It's about understanding why an option is taken and why an option is not taken. What is the meaning of each option? What you have essentially done here is that you have essentially revised the entire concept of these costs. You have spent 20 minutes in a question. I couldn't care lesser. Spend it. It is not about solving as fast as possible today. The exam is in the end of September. I need to do what today? I need to study plus revise today. And that is exactly what we did. We revised the concept. That's how you prepare for the exam, right? Now, next, next, let's go down here. Now, we are now going to look at question number obviously 29. Let's take a look at question number 29. Now, what does 29 say? This is an interesting one. This is an interesting one. In order to avoid pitfalls in relevant cost analysis, what should the management focus on? Variable cost alternatives that are different for each alternative. This will be a differential cost. Long run fixed cost of each alternative, which will be relevant because it's incurred in the long run. Anticipated fixed cost and variable cost of all the alternatives, and the anticipated revenues and costs that differ with each alternative. Now, I want you to understand for question number 29. See, please try to understand that anticipated revenues and costs, anticipated revenues and costs the main determining factor, are the main determining factor in the process of decision making. I am not saying that differential costs are not important. I'm not saying that relevant fixed costs are not important. They are important. But what is the most important? What is the most important? The most important is anticipated revenues. See, if somebody gives you four options, all four options are very good options. Which will you choose out of the four ones? The best one. All four options are very good. What will you choose? The best. So, in questions that are drafted like this to confuse you, you might say that option number A is also correct and option number D is also correct. But ask yourself as a businessman, will you focus on differential cost or relevant revenues and total relevant costs? Sir, I will focus on total relevant revenues and costs. Why? Because in those relevant costs, differential cost will automatically get included. That's the thing here. So anticipated revenues and costs are the main determining factor in the process of decision making. Hence, they are your answer over here. Hence, they are your answer over here. Right? Other arguments also can be entertained. But what is the most healthy argument? What is the most logical argument to make over here? That anticipated revenues will be there and the costs will have to be checked for every alternative. Next, we go to question number 30. What does question number 30 ask us? Question number 30 asks us in a joint manufacturing process. Oh, very important. We are going to do this with the help of a diagram. Now, let us say that there is a manufacturing process. Now, in this manufacturing process, there are two products. There are two products produced jointly. There are two products that are produced jointly. What are these two products that are produced jointly? Say, for example, there is a product called Flint, and say, for example, there is a product called Chuckles. Flint and Chuckles were both my favorite GI Joes. Basically, when I was a kid, I used to play with GI Joes. So Flint was a GI Joe. He was my favorite GI Joe. And Chuckles, oh sorry, not Chuckles actually. Chuckles was another character, but there was another famous GI Joe character. His name was Duke. If you've watched the cartoons, amazing. Like Duke and Flint, they're like the main GI Joes, right? They're the ones who go and fight for the GI Joes. Now, anyway, so there are two products that are produced. One is Flint and one is Duke. Now they are produced jointly. Now they are produced jointly. Now they get produced, and finally they come to a point where now they will be split off. At or up to this split off point, they are jointly produced. But after split off, Flint becomes a separate entity and Duke becomes a separate entity. So after split off, Flint will have his own further processing cost and Duke will have his own further processing cost. Now please try to remember, this is a concept and this concept will be useful very soon. We might even change the order of questions if I feel like. Now please pay attention to what I'm trying to say here. Suppose if I say that selling price at split off point. Now if I say selling price at split off point is say $15, is how much? $15. But selling price after split off is, let us say, $21. Is how much? $21. So basically after split off means what you have done is you have done further processing. Now further processing has given you $6 extra of revenue. Please try to understand. Earlier how much were you getting? Now how much are you getting? Surprisingly, people who have studied USCMA Part 1 will know that this is a part of joint and byproduct costing, which is a part of USCMA Part 1 in the cost management unit. It's coming here also. Can't help it. There are questions on this also over here. And we'll see. It's a commonality. Now, what is the further processing revenue that you got? You got this. But now for further processing, this is the revenue. I get it. But further processing will also have a cost. Let us say the cost is $8. Now please try to understand. I am talking about case A. My further revenue is 6 and my further cost is 8. Will I do this? No. I'll end up having a loss. In case B, let us say my further revenue is 6 and my further cost is, say, for example, 4. So will I go for this? Yes, I will go for this because I'm making a profit. So please try to understand that incremental revenue has to be greater than incremental cost. Incremental revenue of further processing has to be greater than incremental cost of further processing. If this happens, then what will you do? You will go for further processing. So further processing will be approved in this particular case. This is something that you need to understand. So what are we looking at over here at question number 30? Now in this whole thing, our decision was based on what? Incremental revenue and incremental cost of further processing. So basically this joint fixed cost, two products are produced jointly, that is before split off. Everything before split off is absolutely irrelevant. Why is it irrelevant? Because it is already incurred, it is already finished, it is irrelevant. There arises no doubt that they will be incrementally included for every production, but the decision here is not whether I should produce. The decision here is that whether I should, after the production, make some changes in the product and further produce it to make a completely new product altogether. Please try to understand. So the decision is not to produce or not to produce. It is not should I or should I not produce. It is should I, after the production, do some further processing. So for that further processing, I am only interested in incremental revenues and incremental cost. I am not interested in any kind of before the split of cost that is incurred. That is absolutely sunk, irrelevant, historical, it's garbage, right? So this right here is your answer. There might have been different interpretations that can come off this question, but the most exam oriented and exam centric one here happens to be that of question number 30, alternative A. Now we go to question number 31. Question number 31 is a rather interesting question because question number 31 more than anything speaks to you, it speaks to the entrepreneur in you. If you're a businessman, what will be your decision here? I would always ask my students. Question number 31. Very simple. Jack Blaze wants to rent a space in a new shopping mall. In a new shopping mall. Okay. For a 3-month holiday shopping season. He believes that he has a new product which is available, which has the potential for good sales. He thinks that this product has got good sales. The product can be obtained on a consignment at a cost of 20 per unit, and he expects to sell the item for 100 per unit. So he has got a good margin as well. Due to other business ventures, Blaze's risk tolerance is low. They can't afford to lose money on this deal because they have other businesses also. Blaze recognizes that Blaze recognizes that as the product is entirely new, there is an element of risk. The mall management has offered Blaze three options: a fixed fee of 8,000, a fixed fee of 3,900 plus some 10% of his revenue and 30% of revenue. Which one of the following actions will you recommend to Jack Blaze? Now, please try to understand first of all. In the new business, Jack has no or very little appetite for risk. What is the meaning of risk? Risk means fixed cost. Risk means fixed cost. Don't forget the concept of leverage, even if you are doing costing. What is operating risk? Operating fixed cost. What is financial risk? Interest cost. So, for me, risk is a fixed cost. So, what has to be avoided? So, if risk is to be avoided, just a second, 1 second. The tablet seems to have malfunctioned. Oh, oh. My apologies. So I was saying if it's a new business and you have very little appetite for risk, so what do you have to do? You have to avoid fixed cost. If you have to avoid fixed cost, you cannot obviously have a fixed fee. The idea of a fixed fee cannot be accepted. So option 1 and option 2 can't be done. So you have no other alternative but to go for option number 3, because option number 3 is the only option where there is no fixed cost. If there is no fixed cost, then there is no risk. That is why you have to select the third option no matter what the revenues are. You can't cry to say that, "Arey, now 30% of my revenues are gone." It's a risk it's a decision you have taken because you don't believe that it's going to be the right time to do business. You decided to opt for a lower risk. That is why you are going to lose out on your revenues. I hope everybody understands. Now we go to question number 32. Profits that are lost by moving an input from one use to another use is nothing but an opportunity cost. You are losing one opportunity or one usage and you are going in for another usage. That's essentially what is happening over here. So now next we come to question number 33. Question number 33, now a numerical question after a while. So of course we get back to our numerical solving. Let's pay attention. The refrigerator company is manufacturing ice makers for installation in its refrigerators. The cost per unit for 20,000 units of these particular ice makers is given to you. Direct material is a variable cost. It is relevant. This is question number 33. We are looking at question number 33. So here what is happening is direct material, it is a variable cost. It is relevant. It is $7. Direct labor, again, it is a variable cost. It will have to be relevant. There is no other option. So that's another $12 of relevance. You have variable overhead, which is again a variable cost, which is relevant, which is another $5 of relevance. Now let's look at the next one. Fixed overheads. Generally considered to be irrelevant, but when it comes to fixed, only the avoidable aspect is relevant. The unavoidable can be absolutely ignored. Let us see if that is there. Now, Cool Compartments has offered to sell 20,000 ice makers to refrigerator at the rate of 28 per unit. Crazy. This is simply make or buy. What is this? This is make or buy. You can buy for $28. But if you have to make, if you have to make, you have to take into consideration only relevant costs. So what is relevant? Direct material, direct labor, variable overhead. If refrigerator accepts the cool components offer, the plant will be idled, means the plant will stop working, and fixed overhead amounting to 6 per unit can be eliminated. So what is avoidable out of this? Avoidable is $6. So of course, if it is avoidable, it is relevant. So what is unavoidable? The unavoidable element is $4 and it is irrelevant. I hope you understand. Therefore, in this, what will I write down? I will write down fixed overheads which are avoidable. Since they are avoidable, they become relevant and they are $6. They are how much? They are $6. So let's take a total, please. Uh, 7 plus 12, 19 plus 5, 24 plus 6, $30 is relevant cost. What is this? This is the relevant cost of manufacture. What is this? This is the relevant cost of manufacture. The total relevant cost associated with this will be for how many units? For 20,000 units. So the relevant cost has to be 600,000. So your answer here is 600,000. But this does not give me complete satisfaction as a teacher. Please try to understand. What is my relevant cost to make? Sir, it's $30. It's how much? It's $30 because that is relevant for me. And what is my buy cost? My buy cost is $28. Obviously, I will choose to buy. Obviously, I will choose to buy because if I buy, it will cost me 560,000, and if I make, it's going to cost me 600,000. That's the challenge over here. Hence, I will choose to make. The question here is not whether I'm going to make or buy. The question in this is not whether I'm going to make or buy. The question is what is the relevant cost? That's a bloody ridiculous, idiotic question. That's a ridiculous, idiotic question. On a more philosophical basis, would you judge a woman for her beauty or for her virtue or what the kind of person that she is? Kind of person that she is. Are bloody hell, in a make or buy question, your bloody institute is not asking you whether to make or buy. They are asking you hot or not.com. Are what is this here? It's not important. It's not important. What am I talking about? Make or buy. So tell me, will you make or will you buy? In this scenario, I will buy. But why are you asking us this question? It is not asked in the MCQ. अरे MCQ गया भाड़ में. आज रिवीजन चल रही है. Your revision is going on. It is not your exam. Exam में just write the bloody relevant cost and just get lost ahead. But when you are studying, you have to do something more than what they are asking. उतना ही करोगे, you will do only that much. Then you will get 360 only. Modi ji said, na, आपकी बार 400 पार. He was not able to do it. We'll do it. Are you understanding what I'm trying to say? We will do it. Got it? Chalo. Next question. Political joke. Next question. Now, question number 34. This is crazy. Huh? This question number 34 is one hell of a crazy question because it has a lot of relevance in its question making ability. Now, see what they are saying. Approach X. Edward has developed a new product which has a manufacturing cost of 30. Now, see, this bloody stays constant throughout. Huh? The marketing director has identified three approaches for this product. First, have a set selling price of 36. The firm staff will sell the product at a 10% commission. No advertisement program. Estimated sales are 10,000. Okay. Please pay attention. Please pay attention. Don't calculate anything. Selling price is equal to 36. This is approach X. Selling price is equal to what? 1 second. We'll rewrite it. Selling price is equal to 36. Now, the manufacturing cost is equal to how much? 30. Then there is a commission. The commission is 10%. 10% of what? Obviously the selling price. So this has to be 3.6. So this has to be 3.6. What are you left with per unit? So per unit I am left with 36 minus 33.6. Sir, I am left with 2.4 per unit. And how many such units are you going to sell? They say over here clearly that you will sell 10,000 units. How many units? Sir, I will sell 10,000 units. So what is my net profit over here? My net profit will come 24,000 in alternative X. Now let's talk about alternative Y. What is my selling price? In alternative price, my selling price is 38. Now, hold on. My selling price is 38. Next, they have the firm staff selling the product at a 10% commission and back them up with a $30,000 advertisement program. Okay. So the manufacturing cost stays at 30. The commission is 10%, which is 3.8. So how much am I left with? 38 minus 30 minus 3.8. So here I am left with how much? I am left with 4.2 per unit. How many units am I going to sell? 12,000. So first multiply this by 12,000. What do I get? I get a total of 50,400. But from this, I have an advertisement program of how much? 30,000. So 20,400 is going to be my net profit. What is my net profit in in case Y? 20,400. Now let's talk about case Z. Now let's talk about case Z. What are they saying? Rely on the wholesalers to handle the product. Don't do bloody anything on your own. Just have a selling price of 32. Sell it at 32. Buy it at a manufacturing cost of uh, 30. That's it. No selling expenses. So your direct gain is 2 per unit. How many units are you selling in this model? I'm selling 14,000 units in this model. So I sell 14,000 here. So what is my net gain? Straight away 28,000. My net gain is straight away 28,000. So here under option X, I am earning 24,000. Under option Y, I am earning 20,400. And under option Z, I am earning 28,000. Let's give them a ranking. Rank 1, rank 2, and rank 3. So what is the chosen alternative ranking? Z, X, Y. This is your answer. Your answer has to be Z, X, Y. So do we have that? Z, X, Y. It's option number C. What is the answer? The answer is ZXY, which is option number C. I hope you're able to understand this. This is question number 34. This is question number 34. I would say that it's a good question because such questions make you actually think. And they are not, it is not necessarily from the chapter marginal costing. It is just making you to calculate the various costs. That all that this question is doing. Please try to understand. Now, let's go to the next question. Next question is question number 35. Now we come to an interesting concept. Here we come to a concept that we have to learn. And the concepts that we are going to learn for the next questions are average cost and marginal cost. Please try to understand. And it can be average revenue and marginal revenue also. First of all, please try to understand. These are the, now this is the concept note that you are getting over here. We'll solve the MCQ after 5 minutes. We'll first agree upon the concept note. Now these are the units that you're selling. 1 unit, 2 unit, 3 unit, 4 unit. Now look at the cost, okay? This is the total cost. For 1 unit, the cost is 10. For 2 units, the cost is 18. For 3 units, let us say the cost comes to 30. For 4 units, the cost comes to 46. Now please try to understand. For the second unit specifically, your cost individually only for the second unit is 18 minus 10, which is equal to 8. Agreed or disagreed? This is known as marginal cost. This is known as marginal cost. For the third unit specifically, I am talking only third. I am talking only third. It is 30 minus 18, which is now for the fourth unit, only the fourth unit, it is 46 minus 30, which is equal to 16. So what did you learn here? You learned marginal cost. What did you learn? Marginal cost. Now if I was to say Give me the average cost of 3 units. It will be 10 plus 18 plus 30 divided by 3. So 48 plus 10 is 58 divided by 3. So it's 17 point something. So this comes to, oh sorry, 19. So it comes to 19.33. What was this? This was average cost. So now if I was to say give me the average cost of 2 units, it's 10 plus 18 divided by 2, which is equal to 14. What is this? Average cost. What is this? Average cost. But what am I getting over and above over here? I'm getting over and above over here marginal cost. What am I getting? Marginal cost. I hope you're able to understand the concept. I hope this makes sense to you. Now, let's go and take a look at question number 35. What does 35 say? Auburn Products Incorporated has combined the following daily cost information for its manufacturing operation. Fixed cost stays fixed, variable cost can change. Average total cost for output at the third level. What are they talking about? Average total cost. Now, please try to understand over here. The variable cost given over here is not variable cost per unit. Otherwise, they would have mentioned that in the question. This variable cost is nothing but your total variable cost. Please try to understand this statement first of all. It is not your variable cost. If it was per unit, they would have written it over there. This is what kind of variable cost? Total variable cost. It is the total variable cost. So here, please try to understand one big mistake that a student can make. What is a mistake the student can make? So if the student is at output of 3 units, if the student is at an output of 3 units, he will say fixed cost is 2000 and he will say variable cost at the third unit here, it's 550. He will say variable cost is 550. So what will he say? He will say total cost is equal to 2000 plus 550 multiplied by 3. He will take this incorrectly as variable cost per unit. And he will say that the total cost is 2000 plus 550 multiplied by 3, which is how much? Which is 1650. And he will say that the total cost is 3650. And he will make the mistake to say that average cost is 3650 divided by 3. So divide this 2000 plus 1650, 3650 divided by 3. What is your answer? The answer here is 1216.7. So approximately 1217 he will give the answer and he will make a mistake. And why this is why this particular option is a mistake. So what did I point out to you over here? What is wrong? What is a mistake I pointed out? Don't make this mistake. This is a mistake. This is a warning. This is your warning. I hope everybody understands the warning sign very, very carefully. Now let's go ahead. Now in going ahead, what is the correct measure? What is the correct answer? Sir, for the correct answer, see, please try to understand. I have units 3. My fixed cost is 2000. And my variable cost is nothing but 550. This is nothing but my total variable cost. So here it will be 2000 plus 550 divided by 3. So this is 2550 divided by 3, which gives me the answer 850 as my average cost for 3 units. Please try to understand this. What is this? This is my average cost for 3 units, and hence my answer comes to be how much? My answer comes to be 850. What is my answer? 850. Here I would like to also revise one very important aspect with you. Please try to understand. Let us purposely do one revision. Let us purposely write over here our output 0, 1, 2, 3, 4, 5, 6, 7, 8. The fixed cost everywhere is 2000. Let us patiently write that down first. Patiently written down the fixed cost. Now let's patiently write down the variable cost, 0. Let's write over here total cost. So total cost will be 2000. Here it is how much? 200. So 2200. Here 380. So 2380. Next over here how much? 550. So 2550. How much over here? So 2700. How much over here? 860. So 2860. Next how much? 1040. So 3040. Next how much? 1250. So 3250. And finally how much over here? So this is how much? 3500. Now let us do the marginal cost. Here not applicable. Here it is 2200 minus 2000. So the marginal cost for the first unit is how much? 200. Next, what will it be over here? 2380 minus 2200. What is your answer? Sir, 180. 2550 minus 2380. What is your answer? 170. What is your answer? 2700 minus 2550. How much you got? 150. 2860 and 2700, 160. 3040 minus 2860, what am I getting? 180. 3250 minus 3040, what did I get? I got 210. And 3500 minus 3250, how much did I get? I got 250. I have calculated the marginal cost of each of the units. For the first unit it is 200, for the second unit it is 180, for a third unit it is 170, fourth unit 150, fifth unit 160, sixth unit 180, seventh unit 210, eighth unit 200 and how much? 250. What did I revise over here? Marginal cost concept. That's all I care about. That's all I care about. If somebody says, change the question, calculate for level 8. Array level 8 nothing, 2000 plus 1500 divided straight away by 8. So I have the ability to calculate the average cost for each of these. Please pay attention over here. If I have to do average cost for the first one, it is not applicable. For the second case, it's 2200 divided by 1. Then it is 2380 divided by 2. Then it is 2550 divided by 3. Then it is 2700 divided by 4. It is 2860 divided by 5. It is 3040 divided by 6. It is 3250 divided by 7. And it is 3500 divided by 8. In this one question of the IMA, we revised the entire concept of average cost per unit, and we calculated marginal cost per unit for each of the first, second, third, fourth, fifth, sixth, seventh, and the eighth unit. We have revised the whole concept. We have revised the whole concept. So we don't have to worry about anything. We are now ready to face the MCQs as they come. But yes, we have to respect the question. We have to be very, very careful while dealing with the question. Now let's go to question number 36. The daily cost of Kelso manufacturing includes 1000 of a fixed cost and the variable cost. But now what is the word they have used? The total variable cost are given to us under. The average total cost. Now please try to understand one thing over here. I have got my output for the 10th, 11th, 12th, 13th, 14th, and the 15th unit. All right. I have gotten total variable cost are shown below. What do I have? I have total variable cost, which is how much? 125, 250, 400, 525, 700, and 825. That's what I have over here. Now what are they asking me? Now if I was to take the fixed cost obviously will everywhere be how much? 1000. There arises no doubt. What is the fixed cost going to be? 1000. Agreed or disagreed? Now if they say calculate the average cost, now if this is the thing, then I would take into consideration the total cost. What is the total cost? 1125, 1250, 1400, 1525, 1700, and 1825. Now this is my total cost. Now if I have to do average, for the 10th unit, it will be 1125 divided by 10. Please pay attention over here. Please pay attention over here carefully. If I have to do average over here, What will my average be? It will be 1125. It will be 1125 divided by 10 for the 10th unit. It will be 1250 divided by 11 for the 11th unit. So what is the answer? It is 1250 divided by 11. What is the answer? It is 113.63. 113.64, and that is your answer. And that is your answer right there. Now, I am doing average for all. So if I have to do for the 12th unit, it will be 1400 divided by 12. 13th unit is 1525 divided by 13. 1700 is this, and for the 15th unit it is 1825 divided by 15. What did I achieve over here? See, ये calculator पे you can do the calculation यार. You don't need me for the calculator calculation. What did you get out of me? You got average. Why are you stopping? Do marginal cost also. For the first case it is not applicable. Now for the second case, 1250 minus 1125, how much? 125. 1400 minus 1250, 150. 1525 minus 1400, 125. 1525, 1700, 375. And this will again be 125. What did you get? You got the marginal cost for each of the output units. So again, in this particular question number 36, while your answer was your option number A, there arises no doubt. What did you end up doing? साला पूरा कॉन्सेप्ट रिवाइज कर लिया. कुछ बचा ही नहीं. कुछ बचा ही नहीं. हम लोग ने सारे एवरेजेस कैलकुलेट किए. अभी सर आंसर, अभी आपको इसमें पूछा है 11th का 113.64, ये तुम्हारा आंसर है. ले भाई, खा ले, चाट ले इसको. बट हैविंग सेड दिस, तू पूरा किया ना राजा. यू डिड द होल डैम थिंग ना. साला एवरेज भी किया, मार्जिनल भी किया, उसका वैल्यू पकड़ो. राइट. दैट्स क्वेश्चन नंबर 36. Next, we go to question number 37. 37 भी इसी बिरादरी का है. 37 भी इसी बिरादरी का है. But 37, please be careful. 37 is asking you an interesting concept here. Question number 37 asks you to create a split of between variable cost and fixed cost for a semi-variable cost. Now here, first of all, let us talk concept again. This is basic concept of costing that we had done in USCMA part 1 when we introduced you to the concept of cost. Revise that concept all over again. Very simple. The first variety that I know is variable cost are variable on a what basis? On a total basis. But variable cost are fixed on a per unit basis. Second, I know that fixed costs are fixed on a what basis? On a total basis, but fixed costs are variable on a per unit basis. Now, let us try to see. My output is 20,000 and my total cost is equal to 30 lakhs. What is my output per unit? It is 30 lakhs divided by 20,000. My answer is how much? 150. Next, for 22,500, it comes to 33 lakh 25,000. Please stop writing, pay attention. Has my total cost changed? On a total basis? Yes. But fixed costs are fixed on a what basis? On a total basis. Therefore, this cost over here, right here, I am saying that since the fixed cost has changed on a total basis, since fixed cost has changed on a total basis, comma, it cannot be a fixed cost. It cannot be a fixed cost. Now, what is per unit? It is 33 lakh 25,000 divided by 22,500. What is the answer? Sir, it is 147.78. It is 147.78. Now see, you can say that it is a variable cost because it is changing on a total basis. But on a per unit basis, for it to be a variable cost, it has to stay fixed. Variable costs are what? They are fixed on a per unit basis. But on a per unit basis, is it fixed? No, sir. On a per unit basis also it is not fixed. Please pay attention over here. So while the cost may be variable overall or on a total basis, comma, it is not fixed on a per unit basis. Therefore, it cannot be a variable cost. Sir, you are not India, you are not Pakistan, then who are you? Bangladesh. Very simple. So, if you are not a fixed cost, if you are not a variable cost, you are going to be a semi variable cost. हम बंगाली है, हमको नहीं जीतेगा. Have you seen that one with Moshin Akhtar? A fantastic Pakistani show on ARY television. You get it on YouTube. Interview the Bangladesh TV captain, and they ask the Bangladesh captain, "Why aren't you not winning any cricket?" हमको नहीं जीतने का है, हम नहीं जीतेगा, हमको हारने का है. And that is what he says, right? I mean, you feel bad for Bangladesh, right? I mean, for the first time when I saw I was watching the Nidhas Trophy, right? And I was out in this restaurant with a few friends, and I told them, यार लास्ट 2 ओवर में या लास्ट कुछ उसको 30 रन चाहिए समथिंग. ऐसे यार बंगाली लोग फर्स्ट टाइम दे विल विन. बांग्लादेश दे विल विन. इट माइट बी अ फर्स्ट नेशनल सिग्निफिकेंट टूर्नामेंट ट्रॉफी फॉर देम, वो भी आईसीसी का बिग ट्रॉफी फॉर देम. सो आउट कम्स दिनेश कार्तिक. And Dinesh Karthik screwed the Bangladeshi bowlers, and he made some 30 runs in 5-7 balls or something like that. And he won the Nidhas trophy. And Virat Kohli went totally nuts and berserk and started dancing on the ground. And the Bangladeshi players, their faces become so small. So it's like, whatever happens, Afghanistan can probably win, but Bangladesh will never win, is something I've accepted in my life. The only time Bangladesh won was in 2007 when Rahul Dravid was our captain. After that, Bangladesh winning is like Rahul Gandhi becoming Prime Minister of India. Don't see it happening in the foreseeable future. Right? Now, anyway, so it's a semi variable cost. Now, how to calculate? Please see. Now, the variable element of a semi variable cost is given as follows. It is the highest cost minus the lowest cost upon the highest units minus the lowest units. This is the formula. This is known as high-low method. This is known as high-low method. What is the highest cost, sir? It is 36 lakhs and 50,000. What is the lowest cost, sir? It is 30 lakhs. What are the highest units, sir? They are 25,000. And what are the lowest units? They are 20,000. So what do we get at? Sir, it's 6 lakh 50,000 divided by 5,000. So we get it at 130 per unit is equal to the variable cost element. 130 per unit is equal to the variable cost element, and that's your answer right here. And that's your answer right here. So I would say it's a pleasant change. It was a pleasant change in the nature of questions, because everything was just apna variable cost, marginal cost. Now get ready to be a little bored, because now again that same thing is going to come your way. Let's take a look at question number 38. Question number 38, fixed cost, variable cost, marginal cost. Now see, I will give you a cheat code over here. I will give you an exam hack for these kind of problems. Question number 38. First of all, look at it conceptually. Please look at it conceptually. Then I'll give you the hack. Now, they are asking us the marginal cost for the 7th unit. So now I'll purposely do this for you. Please pay attention. Output 0, 1, 2, 3. We'll go a little low. 4, 5, 6, 7. And we'll take the 8th also. Now we'll take fixed cost. Now fixed cost everywhere is how much? 2000. Now please pay attention to this. I would not be in the position to do this if the fixed cost was not fixed at 2000. The only reason I will be able to show you the hack is for you to conceptually understand first that the fixed cost is staying fixed at 2000. Now see the variable cost: 0, 200, 380, 550, 700, 860, 1040, 1250, and 1500. Now I'll take the total cost. Total cost is 2000, 2200, 2380, 2550, 2700, 2860, 3040, 3250, and 3500. Now I will purposely take the marginal cost everywhere. Here it is not applicable. Here it is 200, 180. Chalo, everybody start helping me out. Come on. What is the answer here? It should be 170. Yes? Yes or no? 170, 150, 160, 140 plus 40, 180. Yes or no? 180, देखो ना 2860 -3040. हाँ, हम हारेगा नहीं, हम बंगाली नहीं है, हम इंडियन है. So 3250 -3040. What is the answer? 210, and over here finally 250. Now see, this is a stupidity. This is a absolute stupidity. See here, if you, since the fixed cost is fixed, now what you do in the exam, don't go for total cost, just pick up the variable cost column. Just pick up the variable cost column and follow the lighter red ink. Follow the lighter red ink. So in this first case, just a second. Arey yaar, the screen has gotten stuck again. 1 second. Okay, now pay attention. So here, obviously, for the first case, it is how much? 200, 180, 170, 150, 160, 180, 210, and 250. So you are able to do the same thing if you are taking into consideration only the variable cost. So when you are doing a question where the fixed cost is fixed and the variable cost is going to be changing, always use the hack of going by only the variable cost. Always use the hack of going by only the what? The variable cost.
Hello.
Always use that particular hack. Right, guys? Please try to understand this particular concept. Right now, having said this, they're asking us for which unit? They're asking us for the seventh unit. So for the seventh unit, what is the answer? The answer is 210. So just take 210 here and politely say bye bye to the question. Understood? What do you have to do? You have to just take the variable cost element. Now, in the next question that comes your way, we'll solve it that way. Now, the next question that comes your way, if I'm not mistaken, is question number 39. Now, let's take a look at question number 39. What are they saying? Now, this is a different question. They are asking you marginal cost of the 12th unit. Very good. See here. Daily cost include fixed cost. So, ignore. What do you do to the fixed cost? You ignore it. Total variable costs are given to you below. For the 10th unit, it is 150. For the 11th unit, it is 300. For the 12th unit, it is 480. For the 13th unit, it is 620. For the 14th unit, it is 750. And for the 15th unit, it is 900. They are asking us for what unit? 12th unit. 180. 480 minus 300. Straight away, 180. Your answer is option number A. Finish it off. So easy, so simple. No need to write it down in our main notes. You should be able to do it verbally. The total cost of producing 100 units of a good is 800. Now this is a slightly, unfulfilling sum for people who are in a hurry. Because if you are in a hurry, you will make a mistake over here. Now see over here. The total cost. Please try to understand. They are using the word total cost is equal to 800. So if it is a total cost, it will have both a fixed cost and a variable cost element. The firm's average variable cost is 5 per unit. Now, how many units? 100. 100 multiplied by 5. So what is your variable cost? Your variable cost element over here becomes 500. So obviously your fixed cost element is 300. And how many units are you talking about? I am talking about 100 units. Now they are asking us what? Then the firm's fixed cost. Then the firm's average fixed cost is 3. 1 second. If I have to say average fixed cost, it will be total fixed cost divided by units. Total fixed cost is so far 300. How many units are there? 100. What is the answer? Answer is 3. Yes, that is your answer. Total variable cost is 300. No, the total variable cost is 500. Marginal cost is 3. Marginal cost is 8. I will prove that both of these are incorrect statements. I want you to pay attention. How many units am I talking about? 100 units. How many units am I talking about? 100 units. Now please try to understand. For 100 units, if I was to say my fixed cost, now please try to understand my fixed cost is fixed at an average of 3 per unit. So my fixed cost is 300. So even if I make 900 units, my fixed cost will stay 300 only. It's a fixed cost. My variable cost, I calculated it is 5 per unit. So what is it? 99 multiplied by 5. What is the answer? 495. So for 100 it will be how much? 500. So what is my marginal cost for the 100th unit? Marginal cost for the 100th unit is equal to 5. It is how much? 5. It is not 3, it is not 8, it is 5. Therefore C and D are both wrong. Therefore what is the answer? Average fixed cost is 3 per unit. Average fixed cost is how much? It is 3 per unit, and hence it is proven, that what is the correct answer? The correct answer is option number A. The correct answer here is option number A. We are looking at question number 40. Next question. Question number 41. Question number 41. Let's go to 41. Daily sales and cost data for Crawford Industries is shown below. Sales in dollars and cost are given. Marginal cost of the 23rd unit, it is going to be 2240 minus 2170. What is your answer, please? 2240 minus 2170. So if I was to take like this, I can calculate the marginal cost of each of the units. If I was to do it, it could, but let's just do it for the relevant one. What's your answer, please? Uh, 2240 minus 2170. Sorry. So I'm sorry. I took sales here. Oh, I made a mistake. Maybe I need a break. Total cost. I'm so sorry. So 23, it is 1330 minus 1290. What is the answer? The answer is 40. So that goes there. That goes right there. So since I made a mistake, I'll write it down. We are looking at which unit? 23rd. So I will write output over here 22. We are looking at marginal cost. So total cost for 22 is how much? 1290. And for 23 it is 1330. So what will be my marginal cost? It will be 1330 minus 1290. So the answer over here will be 40. So I have rectified my error, small error I did. See, all of us can make mistakes. You don't have to, I don't have to be unnecessarily egoistic and say, I was seeing if you are paying attention. Only bloody idiotic chutia professors do that, you know. There's no better way to put it. Human being है, mistake हो गया, absolutely true, not at all a problem. So now please try to understand. If I am getting exhausted or tired or little bit of concentration goes away, if I start at say 12:30 and now it is 2:30 exactly in 2 hours, sir you are solving so much, you are talking so much, तो क्या एहसान नहीं कर रहा हूं मैं मेरा काम कर रहा हूँ. वो टाइम पे तुम लोगों को 3 घंटे में वही क्वेश्चंस करने, तो अगर मेरे साथ हो सकता है तुम्हारे साथ भी हो सकता है. You have to save yourself from getting distracted. You have to save yourself from getting exhausted. What is the only way of doing it? Practice 100 MCQs a day when your exam is 45 days away. For 45 days, do 100 MCQs a day. What will happen? You are used to sitting in one place and solving 100 mock tests a day. मतलब institute cannot then fail you because you are doing 100 questions in a day. 3 घंटा एक टाइम पे बैठ के तुमको 100 questions करने की आदत है. Don't worry, you join Apex, you will get 100 mock tests also. We have the tools to create 100 mock tests. Don't worry about it. We have already created 25 mock tests and placed it on our learning management system. It will be released to the students very, very soon, right? And these mock tests are Becker, Sargent, Hawk, Gleim, Wiley, everything Bhel put together, and we have created new questions out of it. So it's the best probable study material you will get, राइट, फुल ऐसा देश है मेरा भारत देश, इधर का उधर का उधर का सब रंगीला, अंडरस्टूड, भेल. नाउ let's go to question number 42. Question number 42 is a very interesting question. Question number 42 is a very interesting question because in question number 42, students get confused as to what level they are supposed to calculate. So now please pay attention to question number 42. What does question number 42 say? Question number 42 says Parker Manufacturing is analyzing the market potential for its specialty turbines, and Parker has developed its pricing and cost structure for the specialty turbines over the various relevant ranges, and the pricing and cost data for each relevant range has been presented for you below. 1 to 5 units total fixed cost is given, unit variable cost is given, and unit selling price is given. Similarly, like that, 6 to 10 units is given, 11 to 15, and 16 to 20. You will notice that in your answer alternatives, which one of the following will give you the highest operating income. They have given you 8 units, means it falls over here. They have given you 10 units, means it falls over here. They have given you 14 units, means it falls over here. And they have given you 17 units. So they have asked you to calculate in these categories. Let us begin one step at a time. Let us start with 8 units. Now please try to understand what is the variable cost. The variable cost for 8 units will use the variable cost of 50,000. Please try to understand. So the variable cost will be, and it is a unit variable cost. I want you to be very careful about it. So it is 50,000 per unit. For how many units? For 8 units. So the variable cost is 4 lakhs. What is the fixed cost? The fixed cost again becomes 4 lakhs. So what is your total cost? Your total cost is equal to how much? 8 lakhs. And what is the unit selling price? The unit selling price is 1 lakh per unit. Unit means 1. For how many units? 8. So what is your total selling price? 8 lakhs. So what is your profit? Your profit is nil. What is your profit? Now let's go to 10 units. The variable cost for 10 units still falls under 50,000 multiplied by 10. So it is how much? 5 lakhs. The fixed cost will continue to be how much? 4 lakhs. Agreed? So the total cost is how much? 9 lakhs. The selling price is 1 lakh units multiplied by 10, which is equal to how much? 10 lakhs. So the profit is how much? 1 lakhs. Agreed or disagreed? Please tell me that. Next, next, we are now going to look at how many units? 14 units. 14 will fall in which category? 14 will fall over here. Now pay attention. What is the unit variable cost? Sir, the unit variable cost is 45 per unit. So it is for, sorry, 45,000 multiplied by 14. So do please do 45,000 multiplied by 14. What's your answer? Sir, it's 6,30,000. What is your answer? 6,30,000. Fixed cost in that category stands fixed at 6 lakhs. So what is the answer? 12 lakh 30,000. What is your selling price per unit, sir? Selling price to 1 lakh ही है. But how many units am I selling? 14. So how many units? 14 lakhs total. So what is my profit? 1 lakh 70,000. Next. How many units they are saying next? They are saying take 17. Now 17 will fall under which category? 17 will fall over here. What is the variable cost per unit? Sir, again it is 45,000 per unit. For how many units? 17. So 45,000 multiplied by 17. What is the answer? Sir, it is 7 lakh 65,000. Next, what are we looking at? We are looking at fixed cost. Sir, fixed cost over here are 8 lakhs. Be careful. Be careful. So 1565 is what? It's my total cost. 1 lakh units are being sold at the rate of how much? Oh, sorry. 17 units are being sold at the rate of 1 lakh per unit. I'm so sorry. Unit selling price is 1 lakh. So 1 lakh per unit. How many units? 17 units. So 17 lakhs. So what is your profit? 1 lakh 35,000. So what are they asking you? Who gives us the best profit? The answer is 14 units gives us the best profit. The answer is 14 unit gives us the best profit. That's it. Simple. I hope you're all able to understand this particular concept. Not too complicated. Very, very straightforward. Very, very simple. And absolute free marks in the exam. Just you should have the presence of mind. Now, question number 43. Question number 43. Now, when we look at question number 43, let's see what they are saying. Question number 43. A fuel company can sell 8 units of a product at a selling price of 450. Okay. Selling price is how much? 450. At a selling price of 450, it can sell how many units? 8 units. So if I was to take this 450 multiplied by 8, I will get 3600 as my total sale. However, at a selling price of 445, if the selling price is how much? 445, the company can sell how many units? 9 units. So 445 multiplied by 9. What is the answer? 4005. This is the total sale. What is the marginal revenue? So this is 8th and this is 9th. So what is the marginal revenue? Marginal revenue is equal to 9th ka revenue minus 8th ka revenue. So what is the answer? It is 4005 minus 3600. The answer is how much? 405. The answer is how much? 405. Some poor students, what they will do, they will say 8 units ka 450 hai and 9 units ka 445 hai, and they will say that the answer is minus 5. And this is a mistake. And this is a mistake. Please don't commit this mistake. Please don't commit this mistake in your exams. I'm keeping this mistake highlighted over here for a very simple reason that भाई ये गलती है, इसको नहीं करना है. Correct answer is over here. The correct answer is highlighted for you over here. The correct answer is 405. So it's been given enough of a highlight. Next, we go to which question? Next, we are looking at question number, sorry, we are looking at question number 44. We are now looking at question number 44. Let's pay attention, everybody, to question number 44. What does question number 44 have in store for us? Question number 44 says a company's budget includes the following cost per unit of the most popular product of its most popular product. The variable manufacturing cost 64, fixed manufacturing overhead 45, sales commission 3, fixed selling and administrative costs are 32. Although the product can normally sell for 160, the company has received a special order from a new customer. My dear friends, they are saying what? Special order. Always remember, take or recover only relevant cost. Only what cost? So fixed cost which are avoidable are relevant. Variable cost incrementally incurred are relevant. This income will, if the plant has idle capacity, means plant has idle capacity. Please remember, if idle capacity exists, please try to understand. Idle capacity exists. What is the meaning of this? There are 10,000 units ka capacity. 8,000 is used. So what is idle capacity? Idle capacity is 2,000. Now please try to understand. The fixed cost of this company is 50,000. Is how much? Now since you have used 8,000, 50,000 will be recovered from how many units? 8,000 units. You cannot cry to say that, Are, these 2,000 units I've got idle. I've got a special order of 2,000 units. Let me recover 50,000 from those 2,000. No. Why not? Because when you started your manufacturing, आपको सपना आया था क्या? Did you get a dream that I'm going to get a special order? No. So what did you focus on? You focused on what is your usage. You focused on what your actual was. And what was your actual? 8,000. So your actual fixed cost per unit will be 50,000 divided by 8,000. The answer is 6.25. You will not consider the idle capacity in the fixed cost calculation, because whether you use the idle capacity or you don't use the idle capacity, the fixed cost is going to stay 50,000. Understand this particular concept. तू idle capacity use कर या मत कर, तेरा fixed cost कितना रहने वाला है? 50,000 ही रहने वाला है. इस बात को समझने की कोशिश करो. It's never going to change. सो हियर क्या है? उसके पास आइडल कैपेसिटी है. तो अगर उसके पास में आइडल कैपेसिटी है, तो ये जो फिक्स कॉस्ट है ना, इसका कोई टेंशन नहीं लेना है. इसका भी कोई टेंशन नहीं लेना है. प्लीज ट्राई टू अंडरस्टैंड. its income will increase by accepting the order if the selling price per unit is greater than. Now, please try to understand. Here, what are the relevant cost going to be? The relevant costs are going to be only my variable costs. And what are they? My variable manufacturing cost, which is how much? Which is $64. And my variable selling cost, which is how much? Which is $3. Sir, why did you take the variable selling cost? Please try to understand. Here, it is not specifically mentioned that fixed cost, sorry, that variable selling cost was avoided on special order. For all you know, for all you know, you may have got special order due to this selling cost or this selling effort. So don't ignore. So don't ignore. Please try to understand. So what are your relevant cost over here? $67, and that's your answer. What is the relevant cost? $67, and that's your answer. I hope everybody able to understand this. The problem is that the IMA has got a very dubious and I will say confusing stand with respect to selling overheads of variable nature. This is something that has to be clarified over here, and this particular aspect is going to form the next part of our conversation, because these costs are horribly confusing in your exams, and thankfully question number 45 and 46 have come our way. Therefore they are very important, they are flashpoint questions, so we have to take 45 and 46 into consideration. Now let's take into consideration question number 45. These are flashpoint questions. What's a flashpoint? A point that makes you think about the whole damn thing. कौन है ये लोग, कहाँ से आते हैं? That is what is a flashpoint, right? So this is 45. So now please try to understand. So these are like a politician's promise. एक में कुछ है, दूसरे में कुछ है, full जनता की तो माँ बहन हुई पड़ी हुई है. Now please try to understand what I'm trying to say. Now focus on this. Question number 45. A company manufactures a product that has got the following unit price and costs. Selling price 300, cost. Direct material, variable. Direct labor, variable. Variable manufacturing overhead, obviously variable. Fixed manufacturing overhead, variable selling, fixed selling and administrative. Total cost is given. Now see, the company received a special order of 1000 units. Okay. The company has currently got an excess capacity, but it has an alternative usage for this capacity that will result in a contribution margin of 20,000. It has an excess capacity. Now see, please try to understand. If excess capacity is not used for special order, comma, it can have alternative use. Any doubts, any questions? Sir, it's given in the question. Now, sir, iske aage. What is the income from alternative use? Sir, the income from alternative use is 20,000. Sir, my special order is of how many units? If I divide this by 1000 units, I get $20 per unit. $20 per unit. So special order must recover the opportunity cost. This is nothing but an opportunity cost because you are losing the opportunity of 20,000 at the rate of $20 per unit, and this becomes what? This becomes a relevant cost. Now please try to understand. They are not saying anything about fixed cost. They are not saying anything about any other cost. So can I say direct material, you are variable, therefore you are relevant? What is the answer? $40. Relevant. Next. Can I say direct labor, you are variable, therefore you are relevant? How much is the answer? $30. Next. Can I say variable overhead of manufacturing? Of course, तेरे नाम में ही variable है तो तू variable ही है. You are relevant. You are how many dollars? $24. Any doubts? Sir, variable selling. सर तेरे नाम में भी वेरिएबल है तो तू रेलिवेंट है. $6. और कहीं पर भी इन द क्वेश्चन इट इज नॉट रिटन दैट these selling expenses can be avoided for special order. Is it specifically written? So, sir, I am writing a note over here. I am writing a note over here. Nowhere it is specifically mentioned that, nowhere it is specifically mentioned that selling expenses of $6 per unit, handwriting is become very bad, just tolerate for a minute. Nowhere it is specifically mentioned that selling expense of $6 per unit can be avoided for special order. So we have to continue to consider the same. So we have to continue to consider the same. Agreed or disagreed? And on top of all of these, there will be an opportunity cost which is relevant of $20. So now please take a total of all of this. What is the total of all of this? The total of this comes to how much? What's your answer, please? The total of this comes to $120. So what is your answer? Option A. What is your answer? Option number A. I hope you're able to understand what I'm trying to say. Agreed or disagreed? Please tell me that. 100%. So that's question number 45. That was silent. Since it was silent, I took the sales. Now look at question number 46. This is one madness. Huh? Now look at question number 46. Let's go to question 46. Johnson Company manufactures a variety of shoes, and it has received a special one-time only order from a wholesaler directly. Now see, it has received directly from the wholesaler. Have you done any marketing? Have you done any advertisements? Anything? No. See, I'll tell you one thing. I'll give a simple example to my students who are sitting in the classroom. Okay, now listen. Huh? We ran a marketing campaign on WhatsApp. Okay. Hetal joined us because she was not happy with her existing classes. So she saw that and she came. Siddharth joined us because he was not happy with his existing classes. He came. सिद्धार्थ गॉट हैप्पी ओवर हियर. उसको अच्छा लगा, बोला वाओ सर मजा आ गया, क्या टकला है, आप शाखा लो, वेरी गुड. बोला ठीक है. सिद्धार्थ की मम्मी की दोस्त हार्दिक की मम्मी की दोस्त है. आंटियों की कॉन्फ्रेंस पे आंटियां बैठी थी. तेरा बेटा कहाँ पढ़ रहा है? बोला, मेरा बेटा वहां पढ़ रहा है. सो व्हाट डिड दे से? आई ऑल्सो वांट माय सन टू गो टू द सेम प्लेस. व्हाई? बिकॉज योर सन इज हैप्पी ओवर देयर. हार्दिक को आने में कुछ मार्केटिंग हुआ क्या? वो तो बेचारा डायरेक्टली आ गया. वो तो बेचारा डायरेक्टली आ गया. सो एनी मार्केटिंग कॉस्ट फॉर हार्दिक? नो. एनी मार्केटिंग कॉस्ट फॉर सिद्धार्थ? यस. Understand the difference. Over here, what has happened? You have gotten the order directly from wholesaler. Any direct marketing done? Direct sales done? So far, no. John has a sufficient idle capacity to accept the special order. होना ही पड़ेगा, नहीं तो क्वेश्चन नहीं बनेगा ना. जोक था ये. Okay. So accept the special order to manufacture 15,000 sneakers at a price of 7.5 per pair. अच्छा. Selling price कितना है इसका? $7.50 पर यूनिट. और कितना यूनिट बनाना है इसको? 7.50 per unit. और कितना यूनिट बनाना है इसको? अब आगे देखेंगे। जॉनसन्स नॉर्मल सेलिंग प्राइस इज 11.5, ये इसका नॉर्मल सेलिंग प्राइस है। वेरिएबल मैन्युफैक्चरिंग कॉस्ट इज 5, प्लीज पे अटेंशन। नाउ इन दिस इफ आई वाज टू टेक अ लुक एट हिज कॉस्ट्स, कॉस्ट के अंदर वेरिएबल मैन्युफैक्चरिंग इज हाउ मच? इट इज $5 पर यूनिट। आगे देखते हैं। एंड फिक्स्ड मैन्युफैक्चरिंग इज $3 अ पेयर, आई विल इग्नोर इट। Variable selling cost. How much is the variable selling cost? It is 1 per pair. It is 1 per pair. What would be the effect on Johnson's operating income if if what? If this is accepted. Now please try to understand. Please try to understand. I want you to focus over here. Now see, question is saying, I want you to focus here. Question says, comma, order received from wholesaler directly. So there was no element of a selling expense. There was no element of a selling expense over here, as it has come what? Directly. Therefore, please understand, selling price 7.5 per unit, relevant cost per unit, gain. How many units special order? 15,000. 2.5 multiplied by 15,000. 2.5 multiplied by 15,000. What is your answer? 37,500 is your answer. The answer is option number C. The answer is option number C. Now over here, I would like to point out a mistake. I would like to point out a mistake. Please pay attention. I would like to point out a mistake. The mistake will be to ignore that order was directly received from the wholesaler. The mistake will be to ignore this. If you ignore this, selling variable cost becomes relevant for you. Selling variable cost becomes, so then what is the mistake? मतलब आगे क्या आप टोटल क्या वाट लगा दोगे? ये 5 का वेरिएबल मैन्युफैक्चरिंग रहेगा, ये $1 का क्या रहेगा? वेरिएबल कॉस्ट ऑफ सेल रहेगा। तुम्हारा टोटल कितना हो जाएगा? 6। तुम्हारा टोटल रेलिवेंट कॉस्ट कितना हो जाएगा? 6। तुम्हारा सेलिंग प्राइस विल कंटिन्यू टू बी 7.5, इट विल बी 1.5 per unit gain, and this will be multiplied by how many units? 15,000. So 1.5 multiplied this by 15,000. What is your answer? 22,500 will be your net gain, and this is full on mistake. This is wrong. This is why it is wrong. It is wrong because of this particular statement. It is wrong because of this. Question says that order received from us, from wholesaler directly. So there was no element of a selling expense. Hence, it has come directly. Therefore, over here, we have ignored the selling. Therefore, over here, what have you done? You have ignored variable selling. You have ignored variable selling. It comes to it comes to 2.5. Therefore, it comes to how much total? 37,500. The mistake will be to take it by ignoring this word as received it directly from the wholesaler. If the word over here directly was not there, if it was received from wholesaler, see over here, if it was, see this, received directly from wholesaler, and it is received from wholesaler. Over here, selling you can ignore, but over here, selling you have to take. Why? because it is received from wholesaler. Could have been received any goddamn way. It is not received